The evolution of money, once confined to tangible assets, has undergone a seismic shift, ushering in the era of cryptocurrencies. From the enigmatic origins of Bitcoin to the blossoming landscape of digital assets, the world of finance is undergoing a revolution unlike anything witnessed before. In this realm of rapid change and innovation, one recent development has set the financial world abuzz, a potential game-changer that could revolutionize how we perceive and invest in cryptocurrencies. Enter BlackRock, the titan in the realm of asset management, the firm renowned for its influence in steering global financial markets. Their contemplation of entering the cryptocurrency sphere with a proposed Bitcoin exchange-traded fund, ETF, has stirred waves of anticipation and excitement, echoing through boardrooms to the buzzing corners of crypto forums. The very mention of BlackRock, coupled with the prospects of a Bitcoin ETF, has sparked fervent discussions, debates, and tantalizing speculation among investors, enthusiasts, and market analysts alike. The anticipation surrounding the potential approval of BlackRock's Bitcoin ETF is palpable, with industry experts dissecting its potential impact on the cryptocurrency market. Will it mark a watershed moment in legitimizing crypto investments for institutional players? Could it pave the way for broader adoption and acceptance? In this journey, we delve into the significance of BlackRock's proposed Bitcoin ETF, a development poised to chart a new course in the world of cryptocurrency investment. Join us as we unravel the implications, dissect the market dynamics, and explore the anticipation buzzing around BlackRock's potential game-changing move. In the realm of investment, exchange-traded funds, ETFs, have emerged as a transformative tool, offering unique advantages that set them apart from traditional investment vehicles. An ETF is a type of investment fund traded on stock exchanges, mirroring the performance of an underlying asset or index. Unlike mutual funds, which are priced once a day, ETFs trade throughout the day, akin to stocks, providing real-time pricing and flexibility in trading. One of the key distinctions lies in their structure. ETFs grant ownership of the underlying assets to shareholders, allowing for intraday trading, while mutual funds offer proportional ownership of the fund itself. ETFs offer a multitude of advantages, making them an attractive investment option. ETFs pool funds from multiple investors to invest across a diverse range of assets, stocks, bonds, commodities, or even sectors and regions. This diversification mitigates risk by spreading investments across various assets, reducing exposure to individual asset volatility. Also, ETFs trade on exchanges like stocks, providing investors with the flexibility to buy and sell shares at market prices throughout the trading day. This liquidity and accessibility offer investors ease in adjusting their positions swiftly, responding to market changes promptly. Furthermore, ETFs are regulated by the Securities and Exchange Commission, SEC, are subject to stringent oversight, ensuring transparency in their operations and holdings. This regulatory oversight provides investors with a layer of security and confidence in the fund structure. Within the realm of cryptocurrency investments, traditional options such as direct holdings, crypto exchanges, or investment trusts exist. However, these options have limitations when juxtaposed with ETFs. Investing directly in cryptocurrencies requires setting up digital wallets, managing private keys, and navigating the complexities of securing assets. Additionally, the lack of diversification exposes investors to the volatile nature of individual cryptocurrencies. While providing a platform for buying and selling digital assets, exchanges lack the diversification inherent in ETFs. Moreover, concerns regarding security breaches and regulatory uncertainties pose risks to investors. Also, cryptocurrency investment trusts, while offering exposure to digital assets, often operate with high fees and premiums to net asset value, NAV. Their closed-end structure restricts flexibility, hindering real-time trading opportunities. Compared to these options, ETFs offer a compelling proposition, enabling investors to gain exposure to cryptocurrency markets without the complexities and limitations of direct holdings, exchanges, or trusts. Let's go through a quick overview of BlackRock. Founded in 1988, BlackRock has ascended to become the preeminent force in the global financial landscape. As the world's largest asset management firm, it oversees trillions of dollars in assets, boasting a diverse portfolio that spans equities, fixed income, alternatives, and more. With its far-reaching influence and expertise, BlackRock stands as a juggernaut shaping the direction of global markets. The tantalizing prospect of BlackRock entering the cryptocurrency market through a Bitcoin ETF has spurred intense discussions and market speculation. Such a move could mark a significant milestone for Bitcoin and the wider cryptocurrency industry. BlackRock's involvement could have a seismic impact on the cryptocurrency landscape. The endorsement of Bitcoin through an ETF could confer an unprecedented level of credibility to the digital asset, potentially attracting a wave of institutional investors who previously hesitated due to regulatory uncertainties and perceived risks. This influx of institutional capital could lead to increased liquidity, decreased volatility, and potentially higher valuations for Bitcoin and other cryptocurrencies. The adoption of a Bitcoin ETF by BlackRock could serve as a monumental step in legitimizing cryptocurrencies in the eyes of traditional finance. As a stalwart in the investment realm, BlackRock's endorsement could pave the way for broader acceptance of cryptocurrencies as legitimate investment assets, shedding the stigma associated with them and integrating them into mainstream portfolios. The entry of a heavyweight player like BlackRock into the cryptocurrency realm could herald a new era. Beyond the immediate impact on Bitcoin's valuation, it could catalyze regulatory clarity and frameworks, facilitating the entry of more institutional investors into the cryptocurrency space. This increased institutional participation could usher in a phase of maturity and stability for the market, attracting further investment and fostering a more robust ecosystem. However, BlackRock's entry into the cryptocurrency space isn't without potential challenges. Regulatory hurdles, market volatility, and technological complexities pose risks that must be navigated. Additionally, the influx of institutional capital could introduce a level of influence that might sway market dynamics in unpredictable ways. I believe that the potential for BlackRock's entry into the cryptocurrency market via a Bitcoin ETF cannot be understated. Its involvement could not only bolster Bitcoin's standing but also revolutionize the perception of cryptocurrencies among institutional investors and the wider financial community. Should this move materialize, BlackRock's impact could resonate far beyond price movements, shaping the future trajectory of cryptocurrencies and their place in the global financial landscape. BlackRock, the titan in asset management, commands unparalleled influence over global markets. Managing trillions in assets across diverse investment categories, its every move resonates profoundly within financial spheres worldwide. The mere contemplation of BlackRock, the world's largest asset manager, entering the cryptocurrency market through a Bitcoin ETF has sent ripples of anticipation across the financial landscape. The impact of such a monumental entry could transcend mere market movements, potentially altering the course of cryptocurrency adoption and acceptance. BlackRock's foray into Bitcoin via an ETF could serve as a watershed moment, conferring a stamp of approval on the digital asset. This endorsement from an institutional heavyweight could catalyze a surge in credibility for Bitcoin and the broader cryptocurrency market, attracting a deluge of institutional capital that was previously skeptical due to regulatory uncertainties and perceived risks. The influx of institutional funds spurred by BlackRock's involvement could fundamentally reshape cryptocurrency markets. Increased liquidity and reduced volatility, attributable to institutional entry, could steer cryptocurrencies towards mainstream acceptance. This potential flood of capital could elevate market valuations, fostering a more stable and mature ecosystem. However, the road to a Bitcoin ETF is fraught with regulatory hurdles. The Securities and Exchange Commission, SEC, responsible for approving ETFs, requires stringent adherence to regulatory frameworks. The uncharted territory of cryptocurrency ETFs presents unique challenges, including market surveillance, custodianship, and investor protection, that need addressing before approval. Moreover, the regulatory environment surrounding cryptocurrencies varies globally. The lack of a cohesive and unified regulatory framework poses challenges in navigating diverse jurisdictions, adding layers of complexity to the approval process. Compliance with stringent regulatory standards across multiple jurisdictions poses a significant hurdle for BlackRock's proposed Bitcoin ETF. The introduction of a Bitcoin ETF represents a delicate balance between fostering innovation and ensuring investor protection. Regulators aim to strike a balance, enabling innovation in cryptocurrency investment vehicles while safeguarding investors against potential risks and market manipulations. My personal consideration is that while BlackRock's potential entry into the cryptocurrency market through a Bitcoin ETF holds the promise of monumental market impact, Navigating the regulatory landscape remains an arduous journey. The convergence of institutional adoption, regulatory clarity, and market dynamics will ultimately chart the course of BlackRock's foray into cryptocurrency, potentially shaping the future of digital asset investment. The availability of a Bitcoin ETF, especially one spearheaded by BlackRock, could catalyze a transformative shift in both retail and institutional investor behavior. For retail investors, accessibility to Bitcoin through an ETF might lower barriers to entry, attracting a broader demographic keen on participating in the cryptocurrency market without grappling with the technical intricacies of direct ownership. On the institutional front, the ETF could act as a conduit, encouraging previously cautious institutional investors to dip their toes into the cryptosphere, lured by the perceived legitimacy and regulated structure of an ETF. Let's see together two possible scenarios. With scenario number 1, we have the approval of BlackRock's Bitcoin ETF. Should BlackRock's Bitcoin ETF gain approval, the market could witness a surge in investor sentiment. Initially, a rush of capital inflow from both retail and institutional investors might drive up Bitcoin's valuation, possibly surpassing historic highs. This heightened interest could prompt other financial giants to follow suit, contemplating their own foray into cryptocurrency ETFs. Such a scenario might prod regulators to fast-track or refine their approach to accommodate the growing demand for regulated crypto investment instruments. The scenario number 2 is the rejection or delay in approval. Conversely, a rejection or delay in the approval of BlackRock's Bitcoin ETF could initially dampen investor enthusiasm. A temporary dip in Bitcoin's price might occur, driven by short-term market sentiment. However, this setback might galvanize industry players and regulatory bodies to collaborate on refining regulatory frameworks. This rejection might also prompt the emergence of alternative approaches or increased lobbying efforts from financial institutions, aiming to address regulatory concerns and pave the way for future ETF proposals. The approval or rejection of BlackRock's Bitcoin ETF holds the potential to trigger regulatory changes. An approval could compel regulatory bodies to revisit and refine existing frameworks, setting a precedent for future cryptocurrency-based investment products. Conversely, a rejection might prompt regulators to delve deeper into the intricacies of the crypto market, aiming to address concerns and foster a more conducive environment for ETF approvals down the line. I believe that the availability or denial of BlackRock's Bitcoin ETF holds the power to sculpt the future trajectory of cryptocurrency investments. While the immediate impact might sway market trends and investor sentiments, the broader implications span regulatory changes and market dynamics. The decision on BlackRock's proposal could serve as a pivotal crossroad, influencing the evolution and institutionalization of cryptocurrency investment vehicles. What are your thoughts on this? The potential introduction of BlackRock's Bitcoin ETF marks a pivotal juncture in the evolution of cryptocurrency investments. The mere anticipation of such a move has stirred fervent discussions and sparked intense speculations across financial domains. BlackRock, as a titan in the world of asset management, wields unparalleled influence. Its entry into the cryptocurrency sphere through a Bitcoin ETF could usher in an era of validation and acceptance for digital assets. The institutional stamp of approval could propel Bitcoin into the mainstream, attracting a flood of capital from previously skeptical institutional investors and reshaping market dynamics. Moreover, the approval of such an ETF could catalyze regulatory changes, paving the way for a more robust and regulated environment for cryptocurrency investment vehicles. It may prompt a broader conversation among regulatory bodies, policymakers, and industry players about harnessing the potential of cryptocurrencies within a structured regulatory framework. As we stand at this juncture, the potential introduction of BlackRock's Bitcoin ETF poses a thought-provoking question. Will this be the catalyst that propels cryptocurrencies into the investment mainstream? The answer holds the key to reshaping the investment landscape, defining the future trajectory of digital assets, and challenging conventional notions of finance and investment. If you found this exploration of BlackRock's potential Bitcoin ETF insightful, don't forget to like, subscribe to our channel, and share this video to continue the conversation on the future of cryptocurrency investments. Thank you for watching and see you in the next video.